Hello everyone, welcome back to my channel. So this video marks the end of the week number 32 in this road to 100k realized return challenge. It has been another hellish week because the whole sorts of news and developments that have been going on at the US economy continue to make investors very nervous and afraid that economic conditions in the United States are deteriorating, and as a result of that, markets continue to come down. As you can see here, we went from a situation in which about 2 weeks ago on Friday, the Friday 2 weeks ago, we had just bought these 300 shares of the QQQ, the ETF that tracks the Nasdaq 100, and as you can see here, in just over the course of 2 weeks, we are now down, and we have an unrealized loss here of $13,000, just over $13,000. And this has been the impact that the last few trading sessions and all those news that have been going on the past few days have had on our portfolio. And just for you to show here, as you can see here in the chart, and I'm going to show here just the last 2 weeks. So this is the trading day in which we bought the shares, as you can see here, and since that point onwards it has been downhill all the way. This candle right here signals the beginning of this week, which just ended, and as you can see, it has been, of course, there were a few positive days here, but nowhere near high enough or strong enough to offset any of those losses, and just markets continue to come down. And the way it is, we have this unrealized loss. Nonetheless, we continue to make some money out of it. We did a lot of trades this week, and as you can see here, it's easier for me to show you here, we still managed to rack up just over $590 in profit this week. So it's not that much, but given the market conditions, it was the best that we could do. As you can see here, there were times in which we had to simply roll over our covered calls on the QQQ, because as the price continued to come down, the calls we sold just became almost worthless just in the middle of the session, and so we just came down, we just bought those back and sold other calls at the lower strike price to get some more premium out of it, and we managed to do that on Monday, and also here on Thursday, and also yesterday on Friday, because the way markets were going, it became clear that the calls we sold would potentially very rapidly lose all their value in the middle of the session, and so it was not worth it to wait until the end of the session for them to die and not being valued anything. We could just bought those back and get some more premium by selling other calls at a lower strike price, always keeping some distance between the strike and the stock price at the time, to avoid being called and being assigned and being forced to sell those shares at a loss. And so this is the way things went with the QQQ. Its value continued to come down, but still we managed to make some value out of it. And as you can see also here, the strike prices progressively were lower and lower, because basically that was the only way we could get some premium out of it. When it comes to Pfizer, it was an interesting story, because this week was very much a roller coaster again. And as you see here, the weekly graph, I'm going to show you here. So it began very well, even though we sold the calls with a strike of $27 here. The shares went to $26.90, at the beginning of the session on Monday, and then it just came down, and it continued that way with some ups and downs in between. But all the way until Wednesday, the market, the Pfizer shares reached their weekly bottom here at around 25.70. And keep in mind that we sold some calls, some puts with a strike price of 26. So these puts were in the money at that point in time over this week. But as the stock continued to recover, started to recover, and especially yesterday, it recovered quite sharply here. And as you can see, the puts just expired worthless, so with no value, because the price went above that particular strike. And also the calls, because the calls had a strike of 27, and so the price never reached the 27, and so all those 24 call contracts that we sold at the beginning of the week also expired here with no value. And so we kept the shares, we kept all the premiums, and basically there was nothing else that we can do about it. The plan for next week, also because as you can see, we are in a position to sell them, and we could sell them at a profit at this point, but with those proceeds we could potentially buy or sell another one put contract on the QQQ at a much lower price here. But given the current price, the impact on our average price would not be that significant, because it's only one contract more that we would be able to sell, and we already have 300 shares, so the impact would not be that significant. And also, as you can see here, looking at the share at the contracts of Pfizer here, this was the return on the calls, and this was the return, this 26% was the return on the puts. And as you can see here, it was much better returns than the ones we would get on the QQQ, because even if we sell a put on the QQQ at this point, let's just say at a strike price of 486 or 87, even then our average price would not be significantly lower, to the extent that we would be able to sell calls on the QQQ without the risk of having to sell the shares at a loss. And as you can see here, 535, which was the price at which we bought these, so times 3 plus the for example 486, let's just assume the best case scenario, we would bought those at 486. If we divide this by 4, our average price would still be 522.75. So we would have to sell the shares at 523 to make a profit, or to at least to avoid having a capital loss. And so because of that, it is my decision not to sell those shares directly and use the proceeds to sell another put on the QQQ. And so the plan here is, now next week we would continue with our strategy. We're going to sell the calls on the Pfizer at the strike price of 27. Again, same thing. We continue to receive good premiums out of this, and especially the premium here at this point is quite good. If we assume that the price, these premiums will remain at the beginning of the session, which is unlikely, but it will be in the ballpark of these 22 cents. And if we sell those 24 contracts, we would receive on the spot 528 euros, which is quite good. So the strategy is to sell these 24 calls on Pfizer. Again, try to sell these shares through the options, not directly, and then we will also sell 3 put contracts with the funds we have here with the strike price of 26, and we still continue to get some premium. Of course, if these are a sign, we continue to lower our cost basis. If not, good, we keep the premium, no harm done, and that's the way it's going to be. Now, When it comes to the QQQ, the plan will be the same. The plan is to continue to sell the calls. For example, now the price is 490.90. We will next week, for example, sell a call somewhere in the ballpark. I would say about 500. Let's just see if the price if the price goes up 2.5%, which is very unlikely. The strike would be 502. So if we sell 3 call contracts around here, 502 will be something around here. So this will be our way to go, and try to see if it recovers, because the main point here is to not to be assigned, because otherwise we will have to realize a very big loss. This is the plan. This is how we will proceed at this point. And yeah, we'll, despite the markets going down, we'll continue to accrue some premiums and make some profits with the strategy that I explained in the previous video that I posted in the middle of the week. You feel free to check it out because it's very interesting. It's about it covers what I did in the week before this one, on week 30, the week 31st of this challenge. And so yeah, so far this is it. The last thing I want to show you here, and this is the activity statement all the way up until Friday, all right, yesterday. And here, in terms of the realized gains or losses, let's just show here, there is this value is outdated at this point, $31,287. And why is that? Because this was the activity statement from yesterday, and so as you can see here, we are not counting with this the last call that we had remaining, this 496 call on the QQQ. So it had this unrealized gain, so it will be realized. So this value will pass over to here or somewhere around this value. And more importantly, if we look at the calls with at the options of Pfizer, here we have this unrealized gain, which, as you can see, it's not, when it comes to here, it will not be 264.34, it will be somewhere around 286.37. And also these 3 put contracts with $20.60 unrealized, when they go through here, it will be somewhere around, as you can see here, $22.32. So these values will become realized in the activity statement on Monday, and this will give us the real value that we already realized, but we'll see. So far this is it. Feel free to leave your comments in the comment section below, and also feel free to like the video and subscribe to the channel. I'm also available on LinkedIn in case you need to ask me anything privately through a DM, and we'll reconvene next Monday for the start of week 33 in this challenge, and hopefully the markets will start to pick up and we will offset some of these losses and continue to our journey to reach $100,000 in realized returns or realized gains. And yeah, I'll see you there.